What's up, Banter fam? I'm your host, Miles, and in today's show, we're going to be breaking down the transition from Web 2 to Web 3. So we know there's many very successful companies in Web 2 which have taken the world by storm. Think Amazon, think Google, think Apple. Well, now Web 3's come along and it's disrupting entire industries. So now it's time to look at the projects which are going to pave their way into these industries and potentially work in tandem with Web 2 to create a new decentralized future. So I want to go through the big industries of the world today and look at the Web3 equivalents and look at what protocols are innovating in each sector to work out where potentially we can get the most upside. Because in crypto, it's all about risk reward. It's about measuring your risk versus the amount of upside potential with a specific project. And I think in today's show, I've got some tokens that I want to show you that do obviously have risks, but have significant upside if they can breach even 1% of the size of some of these industries. Think storage, cloud computing, etc. So we're going to go through that list in today's video. And I do have an Excel spreadsheet here, which has all the big sectors that are currently in the Web 2 space, like Amazon Web Services, Google, Amazon, YouTube, Twitch, Dropbox, Spotify. And we're going to look through the Web 3 equivalents versus the Web 2 equivalents and take a broader view of some of these massive industries that Web 3 is penetrating from a fundamental standpoint. And obviously, we're going to look through all the tokens in regards to their traditional counterparts. Before we get into all of that, I think we have to discuss the charts because there's been some crazy movement over the last few days. I think not a lot of people were expecting the pump. I think the signs were there about a week ago that we were getting a little reversal, obviously with the higher lows constantly printing on the Bitcoin chart. But Ethereum kind of came out of nowhere and broke out. So before we get into the big Web 2 versus Web 3 discussion, let's go through the charts and have a quick look and a quick update with what is happening in the market at the moment. Now, it all starts with the Bitcoin chart. Technically, the rally all started with the Ethereum chart, and that's where a lot of the altcoins followed. But I think by and large, we have to track Bitcoin in order to get a greater sense of where we are sitting as a market now. As of now, we have a range low and a range high that we are still adhering to. So until the range high is broken and we print above 23K and we actually hold there on the 4-hourly, I'd also like to see a daily close. But until we actually close above 23K, I don't think Bitcoin has license to go mega bullish yet, because we technically are still trading within the confines of the range high and the range low. However, due to the buy volume we have seen and due to the amount of demand that we're seeing in the upper echelon of this range, I think it's wise for us to start preparing long scenarios, just because there is potential now we do get a serious breakout. And if we do get a serious breakout, we do want to be prepared. So what are the conditions that I'm looking for to actually validate this breakout, and what would invalidate this breakout? Well, the first thing that I'm looking for, and I think this is an invalidation signal, is this 200 MA. So you see this blue moving average. At the moment, that is the key level that we do need to hold above and close above on the 4-hourly. So I'm looking at the 200 MA. As long as we are above that MA and we close above that MA on the 4-hourly, that is bullish for Bitcoin. And that signals to me the momentum is still to the upside of pressing above this range high. If we close below the 200 MA like we started to in the last 4-hourly cycle, then that is bearish for Bitcoin, and that indicates that a retracement is very likely. So as of now, we are still above the 200 MA, which indicates we are going to come up and test this range high again. Now we can see we did test the range high last night at 22,750. We got rejected. Now I know a lot of people probably would have played the retest long on this range high. If you did play that, then you would have been stopped out, but you wouldn't have actually lost too much capital. So if that is something you're doing, trying to long the range high, just be aware it can be invalidated very quickly. So you do want to set your stops super tight if you are playing this long scenario. But I think what this means for the altcoins is a lot bigger than what it means for Bitcoin. Just step back for a little bit and have a look at the potential this run actually has. Let's say we do break the 23K mark. We come up, we break through, we retest. Then Bitcoin really has license to go to 26K. Now, I'm not necessarily saying this will happen, as we can get rejected, but I'm saying that if we do successfully break to, close above the 200 MA, break through 23, then there is not much stopping Bitcoin from going to 26K. Similarly, if we broke down past the range low, there's not much stopping Bitcoin from going to 15K. Because we've been accumulating sideways in this range for so long, the explosion, when it inevitably happens, is going to be massive. So if we do break through, that would suggest a massive push up to the upside, but we still need to close above 23K. Just remember that, guys. Ethereum ran a lot earlier than Bitcoin. It actually broke through and smashed through its horizontal support. On the 4 hourly and the daily, we have this channel, this descending channel, which we broke out of, formed a wedge formation, and then accumulated sideways for a little bit. And then we actually broke out to the upward side back into this channel. There are two major zones that I'm looking at. The first zone we actually smashed through. The second zone we are currently breaking through at the moment at 1,565. What worries me with Ethereum is Bitcoin right now, because although Ethereum is breaking above this key level and it actually has broken through the 200 MA, even on the daily, it is showing a lot of strength. I'm still worried that if we get this Bitcoin rejection, then Ethereum's rally will kind of ultimately be put to a halt. So on the daily, it's a very positive sign that we are breaking above. A daily close above this range here would be very, very bullish for Ethereum. And I think after that, there's not really much stopping Ethereum from going to the $1,800 range. And obviously that would be another 14% move, which is absolutely massive if you're trading, especially the leverage traders out there. Unfortunately, with the leverage trading at the moment, we are seeing a lot of volatility. So, you could have opened a short, gotten stopped out. If you opened a long at this 200 MA, you could have gotten stopped out very quickly with this wick down. It is a hard market to leverage trade in. So we want to be getting very tight entries with very tight stop losses. So for the Ethereum and the altcoin trades, I actually do have my eyes on Bitcoin right now, just because I know that if Bitcoin gets rejected, the alts are likely to suffer. But if Bitcoin breaks out, then that gives us license to open some longs with very tight stop losses. So what are the projects that you can potentially long? Well, if you watched Sheldon's live stream yesterday, you would have gotten some of these setups. And if we draw in on the 4 hourly, the formation here with the downward sloping trend line, we can see that we actually did retest overnight and come under these trends. So the ADA buy zone that was set at roughly the 47 cent mark, we actually came in and we touched that last night for a long setup, because what we can see is a break out of this trend, a clear breakout of this trend, which potentially has upside potential of, let's say, 60 cents. On the Fantom trade, I think Fantom's another one that if Bitcoin closes above 23 could definitely run. We did see a clear retest of this trend, and if you did long on that line, you'd also be up. The Sol trade as well. Sol didn't really come down as much as some of these others. In fact, it didn't really come back down and test this range. I am looking at this at like $39 because that did break out earlier than the others. It has pulled back slightly stronger, but then we did get this massive reversal as well. So Sol's another one that is potentially looking like a long. But for me personally, I'm not longing until we get some clarity with Bitcoin, because Bitcoin is still the king of this market right now. And although Ethereum is leading the alts, I just don't see the alts suddenly just ignoring what Bitcoin's doing and completely bypassing it in the time being, despite the fact that the dominance is dropping. Just remember, guys, I'm not a professional trader. My bread and butter is what I'm going to get into a second with the fundamentals. I just thought I'd give you a quick update and update you guys on the charts and what I'm personally seeing, because I want to keep you updated with what I'm seeing in this market and be transparent with what I'm doing. So yeah, all eyes on Bitcoin at this range high. If it can close above the 23K region, that is massive for the alts, and you've got your setups for the alts. Also, Sheldon has a coin panel where he updates all of these live for you guys. And yeah, these are all the setups that we're currently seeing, all the breakouts. Potentially, we get a pullback in some of the alts, and then that would be, license to ladder in and load up again with a tight stop underneath. For those that didn't get their entries, I actually played a reversal short last night, made 30% on Sol, closed that trade. And then the next thing I do is probably look for longs on a decent pullback, as long as we are staying above this 200 MA on the 4 hourly. Cheds also has this EMA 34 on the daily. It's actually trading very similarly to the 200 MA on the 4 hourly. And this EMA, he says, is the strongest indicator on the market right now, at least the indicator with the most confluence in terms of Bitcoin right now. He says we really do need to see a close above the 34 EMA for Bitcoin to flip bullish. And until we see that Bitcoin doesn't flip bullish, well, at the moment we are seeing us currently test these levels. So it's a very key day today. Very, very, very key day for Bitcoin. If we do get a close above this region, which is actually currently sitting around the 22,500 region, that would indicate pushing up to break the 23K mark. That would be a massive indicator for Bitcoin to flip bullish. So today's the day, potentially. today could potentially be the day we get that massive breakout. Let's just keep our eyes on the market. It also could be the day we get rejected again, which is why I'm not getting too excited and not getting too bullish yet, because we have been rejected time after time after time, and I'm just keeping my eyes on this range high and seeing if this is the day that we finally break out. Remember, if you guys do want to trade, and you've got your finger on the trigger here, remember there's a ByBit account, link in the description if you want to sign up for an account. We're giving a $4,200 sign up bonus. So a very healthy bonus for you guys that do decide to sign up and deposit. And also we 10x accounts live on the main show. Rana, I think, is back tomorrow to do a main show, and we are 10xing accounts live on the show. So if you don't have a ByBit account and you wish to trade, sign up using the link in the description and claim your deposit bonus. Very volatile market to trade right now, which is a good market to trade, because volatile markets equals more profits. It does also equal more risk, so you do have to be very strict with your risk management. Always remember to have those stop losses in. Always remember to practice safe risk management. But at the same time, volatile markets do present opportunities here. So whether we do get this rejection of the range high or the breakout, either way, whatever way we decide to trade this, there will be significant swings either way. So if you don't have an account, sign up for an account, link in the description. Now the trading stuff is out of the way, and I've given you guys my daily update. You guys know I like to give you the daily update before I get into the meat of my shows. Let's get into this Web2, Web3 conversation. This is a pretty big conversation, and I've got some altcoins today that we haven't talked about much on the show, but I think we need to talk about, and we need to start presenting some of these ideas and think big picture, because I think we get a little bit sucked into sometimes this kind of small crypto Web3 picture of like L2s and L1s and DeFi protocols. And I think it's very important to step back and actually look at how we're progressing as an industry and what industries in Web2 can actually benefit from blockchain technology. Because at the end of the day, blockchain exists to transform industries, and it exists to create a more efficient economy. Now, if blockchain isn't achieving that, then simply there's no point in Web3 at all, and we shouldn't be investing in it. Now, the whole entire point in Web3 is not to replace Web2. It's actually to do things that Web2 couldn't previously do. And that's the really exciting thing about Web3. We're getting an opportunity to see the technologies really impact these industries and create certain dynamics that we've never seen before in the history of humanity, and actually improve the efficiencies of these industries. Now, obviously, this means there's going to be projects that pop up that transform industries that are currently dominated by Amazon, Google, etc. And the opportunities that lie within these projects could potentially be massive. Now, not every project is going to succeed in this realm, but the ones that do could potentially be major winners. And today, we're going to go through just a few of these industries and look at some of the projects that could be winners amongst these sectors. So let's get into it. And have a look at some of these Web3 projects. Just quickly, shout out to Blue Edge Crypto. He gave me the inspiration for this with one of his Instagrams, and then I kind of went through and created my own list based on his list. My list is very different, but nonetheless, he gave me the idea to kind of pursue this idea right now. So I've got a spreadsheet that we're going to use to follow in this video, and let's just dive straight into it, because there's some very interesting stuff we have to discuss. So the first sector that I want to discuss is domains. Now, if you guys know, basically the web is built off the back of domains. It is a massive industry. Currently, right now, the biggest domain provider is GoDaddy. So if you want to buy a website and buy a domain to a .com or a .net or a .org address for a website, typically you'll use GoDaddy. But there's kind of a premises here that as people start to build applications on top of layer 1 protocols like Ethereum, that the demand for domains on certain protocols like Ethereum is going to significantly increase. So if you do believe in this Web3 decentralized future of domains, then I guess it makes sense to go down the path of purchasing an ETH domain or a crypto specific domain. Now, the major domain provider instead of GoDaddy is actually Ethereum name service. So similarly to how you can just go onto GoDaddy, purchase a website, purchase a domain, you can do the same thing on Ethereum name service. You can get a decentralized naming for wallets, websites, and more. And I think this will be massive in the future. I think if you don't have an ETH domain, I think it's potentially worth looking into getting your own ETH domain, because these domains are supposed to be a lot more secure, and I think the whole of Web3 will eventually operate off a lot of these domains. So ENS is actually what is powering this right now. They have a token called ENS, Ethereum Name Service. It's performed badly alongside the entire market. it does have quite a high dilution. So it's got a 4x dilution. I had a look at the vesting. It is fairly slow, and a lot of it is being, released over time. So I'm not so worried about it. As an investment, it's not my favorite, but I do think it's a very, very interesting space because the domain space is huge in the real world. So it only makes sense that if, Ethereum gains the traction that we all think it's going to gain, then Ethereum domains will gain the traction that we all think it's going to gain. So it really is a bet on Ethereum adoption at the end of the day. But I know a lot of us are bullish on Ethereum, so it makes sense to consider Ethereum name service as a potential play here. That's the first one. That's a bit of a smaller industry. Throughout this video, the industries are going to get bigger and bigger and bigger. Google and Amazon are the last ones I'll be talking about in this video, so make sure you stick around for that because the Amazon one is massive. Like, that's seriously a multi-trillion-dollar market, and the project that can capitalize on that industry will be absolutely massive. But we're kind of going to build up based on the size of the industries, and I'll give you some data as to the size of each industry as we go along. Next is Spotify and music streaming. We all know what Spotify does. We all listen to music. We all know how streaming has revolutionized the audio industry. You previously used to have to download and purchase music on iTunes, and that kind of led to this massive piracy wave through LimeWire and these websites where people would go onto the Pirate Bay and they would download songs illegally. So the solution for the music industry was to pivot towards streaming, which had a couple advantages. Obviously, the first advantage being it's much more accessible, easy. You have a much larger basket of goods, and for a consumer, it's a lot cheaper to stream. Now, this kind of created issues for the music industry. Although it was a lot cheaper from a consumer standpoint to stream, the revenues on the artist side started to diminish. And it means that artists per stream are getting paid a lot less than per purchase on a traditional song. If you want to quantify this, it's roughly per one stream, it's $0.005 that an artist gets paid. So I believe for 1 million streams, it's like $500, which is not a whole lot of money for some of these artists, because even though they're getting billions of streams, if you do the calculations, it's only a few $1 million. Whereas previously, when you got millions of purchases on a song, at $2, that adds up a lot quicker, because if you sell 2 million songs, then, that's potentially, $2-10 million, depending on how much they're pricing their songs at and if it's in an album, etc. So although Spotify has been great and Apple Music's been great, it kind of presented some issues for the music industry. So what crypto can actually do here is it can offer royalties for the artists that were previously missing out, and also offer rewards to the users for listening. So it's kind of like a two-pronged benefit here. So when I look at Web3 protocols, I don't just want to look at Web3 protocols that are replacing Web2 for the sake of it, because the reality is Web2 is a lot easier currently and more accessible to use. So when I look at Web3, I'm not looking at replacements, because what's the point of just replacing a Web2 protocol with Web3 for the sake of it? The only reason you'd want Web3 is if it can achieve something that Web2 couldn't, or if it can significantly improve upon the technology of Web2 and make it more beneficial for both the owners and the users of that protocol. Now, this is where this next project, which is the Spotify replacement, or at least not replacement, but competitor, Audius comes in, because this benefits both the streamers of the music because they can get paid in audio tokens, but mostly and most of all, it incentivizes creators because they are getting paid more for per stream, and they actually have ownership over their music because it's distributed on the digital ledger. So the token is called Audius, and it's basically the crypto Spotify, right? Now, obviously, when you're competing with a major behemoth like Spotify, adoption becomes a major challenge. Now, I think in order to gain mass adoption, they do need to incentivize by getting some big creators onto the platform. So if I'm Audius, I'm going to try and want to get some big artists getting the exclusive rights to their streaming onto the platform. And I'm also really going to push the stream to earn component for the users to be able to earn, off using Audius itself. So if you upload, share, and listen, you can earn audio token rewards. And obviously the creators are paid in audio token rewards, allowing them to not only earn money and monetize their music, but also keep ownership over the music and have it on a decentralized blockchain that's not that doesn't have sole control by a singular party. So I do find Audius cool as a project for this reason, because it's a massive industry that has a big issue. And as I said before, the only industries I'm interested in transferring to Web3 are the industries that have issues and can actually be improved by Web3. I think streaming is definitely one of them, and it means Audius is, one we need to have a look at. Just remember, guys, this video isn't calls. This video isn't to give you things that you should buy right now. It's things that I find very interesting, personally as an investor, industries that I think could be transformed, and it's giving you a look into some of the projects that could have significant upside within these industries. It's your job now to take these calls, quote unquote, and add them to your watch list and research them yourself and look into whether it's something you want to invest in. Full disclosure, I don't own ENS or Audius so far. I will disclose fully in this video when I do own a project, just to be totally transparent. And I'll give you my opinion on whether I'd accumulate it. But at the end of the day, it's up to you and which ones you decide to accumulate at the end of the day. But this is a great starting point for you guys to understand the shift from Web 2 that's happening into Web 3. Some people are saying we're getting a Bitcoin breakout. We're testing this range high. So by the end of the show, there may be some news here. I've got a lot to talk about, so the show isn't going to end soon. So hopefully in 20 minutes, we can come back to this chart and have a little look. That's kind of running in the background as well for some potential trades. The next big industry is YouTube and Twitch. So we're continuously getting bigger and bigger throughout this video. The next industry is massive. We're watching on YouTube right now. The first thing I want to say is I don't think YouTube's going anywhere. It's by far, it's got the biggest profile of creators. It's very easy for creators to monetize and make money. Although we wish as creators, YouTube Rev paid a little bit more. At the end of the day, it is, very easy as a platform to utilize. And the whole video entertainment space is very big and hard to penetrate. But there are benefits to having a decentralized video and entertainment streaming platform. Right now, the two biggest ones are YouTube and Twitch. Obviously, Twitch streaming is massive for gaming. YouTube is big for entertainment across the board. But having their Web3 companions here, I think is very important to work in tandem. So similarly to what we saw with Spotify and Audius, paying creators is one of the major benefits. Ownership is one of the major benefits to having these platforms on the blockchain. So when we look at Web3, there's two that actually stand out to me as potential YouTube or Twitch, not replacements, but competitors, I guess you could say. The most obvious one is Theta, and then you also have Veracity on the gaming side. So the Theta network is a very interesting proposition. I've got their massive white paper here now. I could spend all day going through Theta's white paper because it's absolutely massive, and I highly recommend checking it out. It's assets.thetatoken.org. But I guess the main summary here is they think the media and entertainment business is ripe for disruption, and they think that the Web3 business model has much more beneficial economics, or as we like to call them, tokenomics, than their traditional counterparts. There's a few, obviously, sectors that they're trying to kind of breach with this. Now, it's the subscription-based streaming businesses, Netflix, Hulu, Disney, etc. The free ad-supported services, YouTube, Switch, Pluto, Tubi, I've never heard of that, but that's another one they're listing here. And then the transactional pay-per-view models, Amazon Prime, and other OTT services. Some very interesting spaces that they're really trying to kind of that they're trying to transform at the moment. And the way they're going to do this is through actually paying creators and paying users to use their platform and stream their platform. Now, we've actually seen Theta already gain quite a lot of steam on the development side. I know a lot of development is happening on Theta at the moment. It's fully diluted, so from a token perspective, that is a major benefit. An interesting thing to note about Theta is that it was actually created by the original, or some of the original Twitch and YouTube engineers. So they do have firepower coming from both of those companies respectively that teamed up to create Theta. Now, I do actually really like Theta as a project. I think that they have a couple headwinds, a couple hurdles they have to overcome. Firstly is the size of YouTube and the size of Twitch. It's very, very hard to get, similar to Audius, to get creators over to these platforms. I think once the creators do get over to these platforms, they will see the benefit because of the additional revenue that they'll potentially be earning, and based on the transparency and the ownership aspect of having your assets, in this case, your streams, live on the blockchain, there is definitely a benefit there. But the technology isn't ready yet. We know it's still a work in development. We can see in this white paper that they're currently working on their network of interconnected subchains, and they have a mainnet 4 release schedule. So this isn't fully launched, which is obviously why we haven't seen mass creators bridging over, because it's not fully launched yet. But I think there is a lot to say for having a decentralized streaming platform. And it's something I should probably cover a lot more in the future because Theta is very relevant, very prevalent to what we're doing right now. And I do think that this does have potential to disrupt this industry. As I said, you've got Veracity as another option. That's more going after like the Twitch esports side. I think that's more in the gaming realm. They said that the release of Theta Mainnet 4.0 and Theta Metachain SDK will be on December 1st, 2022. So obviously that is in roughly 6 months' time. In addition to Metachain, the Theta video infrastructure is a key component of tools made available to emerging Web3 businesses. So what they're going to do is they're going to have their testnet launch on October 1st, their mainnet target release on December 1st, their Theta video infrastructure happening in Q3 2022 and development in Q2 2022, and Q4 is when they'll kind of launch this infrastructure. So it's not launched yet, hence why we haven't really seen the effects. I think this will be a slow burn. It will probably take a lot of time to get the mass adoption that they do want to take. Very interesting white paper. I highly recommend reading through this if you have spare time. So we have Theta as the next one, Veracity as well, with an asterisk next to it because it's not as direct as what Theta's trying to do. And obviously Theta's the network with much more development happening on the back end. All right, the next major narrative, and I'm keeping my eye on this Bitcoin price that just got rejected. That's happening in the background right now. I'm very almost distracted doing this show because I got one eye on the charts in my left eye looking at what's happening, and it's just a little rejection here still, but still we're above the 200 MA. So let's just keep our eyes on that as well. The next major industry is Dropbox and storage. Wow, is storage a big industry? It is such a massive industry. I think there are some very big narratives in crypto. Storage, cloud computing, and Internet of Things. The three I'm about to talk about have to be three of the biggest in crypto. There's other big narratives. Obviously, you've got privacy, you've got L2s, you've got indexing, but storage and cloud computing are absolutely massive industries. Now, Dropbox right now is just one example of a storage platform. Technically, AWS is also a storage platform through its cloud computing service. I'm going to focus on the Dropbox model first, and then I'm going to focus on more of the AWS model as well to give you guys a two-pronged outlook on the storage industry. Now, the first thing to understand is the size of the storage industry. The global cloud storage market is valued at $70 billion last year. It's projected to grow to $83 billion in 2022. And this is the crazy jump, the exponential jump. Based on Fortune Business Insights, it's projected to jump to $376 billion by 2029. So in the space of just like 7 years, they're expecting this industry to like 3 or 4x, which is crazy. So obviously the growth is happening in storage off the back of the network effect. We know that the more applications that are created online, the more people store data online, the more people store photos, the information from their gaming, the information from their NFTs, and in a traditional sense, all the information that's being created every single day from the internet, and the bytes that are happening off the back of that will need a home. All of this data needs a home, and we know how the network effect uses. The more users that use a network, the more connectivity points between each user, the more data that's actually created. Because each time there is a connection between a user and users talk to each other in a computer sense, then there is a piece of data to reflect that that is actually recorded and logged. And all of this data needs to be stored. And that's why the cloud storage industry is got to be so massive, because not everyone has the hardware to actually store this data. Otherwise, everyone would need stacks and stacks and stacks of hardware to actually store all the data. I mean, just think of your personal life, right? How many of you guys actually use iCloud? How many of you use Google Cloud and Amazon to store your data? Probably most of you, or probably a lot of you use it without even knowing you're using it, because it makes so much sense to store data on the cloud, have it accessible from anywhere and everywhere, and not have to clog up your devices by having all this hardware to actually store the data. Now, that's where the cloud storage companies come in. And one of the biggest ones is obviously Dropbox. Even bigger than Dropbox is Google and Amazon. Now, this is a subscription model. So basically with a Dropbox, even with an Apple through iCloud and Google, you pay for a monthly subscription fee where you get a certain allocation of data that you can store on their service. And that subscription fee basically unlocks a month-to-month storage plan for your data. Now, the most like-for-like comparison in terms of this market is Litecoin. Not Litecoin. In fact, don't buy Litecoin. I'm not bullish on that. It's Filecoin. Because Filecoin is essentially the subscription version and the subscription model of the data storage industry. Now, I also have Arweave here. That's a completely separate storage model, and in fact, they're not competitors. I have compared them in the past, but I think in a way it's a little unfair to do so because Filecoin is going after the subscription model, and Arweave is going after the storage in perpetuity model. Now, I think there's certain benefits to both, but I think Filecoin is the most like-for-like competitor with Dropbox, obviously offering its decentralized subscription service. Filecoin, as well as many other altcoins, has not performed well in terms of price. Obviously, it dropped from over $200 to $5, but it actually is, interestingly, one of the most owned assets by VCs. If we look at Masari's monthly data or quarterly data based on what the VCs hold, Filecoin's actually up there, which is very interesting. Obviously, the smart money certainly likes this narrative. Now, the smart money also likes this narrative, and it's the Arweave narrative, and it's the narrative I prefer to Filecoin because it's data in perpetuity. So with Arweave, if you store data on the blockchain, it essentially stores forever. So unlike Filecoin, where you need to keep paying a subscription fee, with Arweave, when you store data, it stores in perpetuity. So that data will forever be on the blockchain, essentially granting immutability. Now, on a cost basis, this comes out to be a little more expensive in the short term, but in the long term, this can significantly reduce cost. And we've already seen Arweave become home to many projects' data, Solana being one of the major ones. They store a lot of their data, specifically from their NFT marketplaces, on Arweave because they want to alleviate the pressure of having this data actually take up block space. So they want to outsource a lot of this data to alleviate the network and essentially speed up the congestion of the network. So Arweave comes in and steps in as this intermediary for Sol, but then it also is partnered with projects like Polkadot. Not many people know that Polkadot does store data on Arweave as well, and Arweave has many, many partnerships across crypto to actually store data. And this has resulted in the weave size, which is the total amount of storage on Arweave, basically exponentially increasing at a very fast rate from September 2021 until July 2022. I mean, with almost 5 or 6x the amount of data being stored on Arweave, which is now over 80 terabytes. I expect this to continue increasing. Arweave has had one of the most positive price performances of any crypto over the last few months. Yes, it got hit very heavy, but we've seen the rally. We've seen this bounce over the last few weeks. It's quite significant, and that's because some of the announcements they've been making is very, very bullish, and they continue to stay adaptive with their partnerships on the business development side, which is great for Arweave, obviously, being a protocol that plays such a major role in the cloud storage space. So that is one definitely to keep your eye on. I said I disclose what I hold. I obviously hold Arweave. I don't hold Filecoin, although I actually think Filecoin's a decent bet. I was skeptical of Filecoin at first, but I think it's actually a solid bet. A lot of people are saying, check Fantom. Wow, Fantom's running, and Bitcoin is showing a bit of strength as well. Fantom is definitely running. This is not the time to buy, though. Definitely, you don't want to buy until this retest at 27.5. Unfortunately, if you're not in a long now, I wouldn't get into a long. I would wait and see how Bitcoin reacts to this range high still. All right, next industry, another big one is cloud computing. Now, this one is absolutely massive. I want to get the data for you guys here. Wow, this is massive. So the cloud computing market, we talked about data storage being a $90 billion market in 2023. Let's look at cloud computing. It's already a $524 billion market. By 2030, they expect the cloud computing market size, and I say this is Precedence Research that did this report. They expect the market size to be $1.6 trillion by 2030. Absolutely exponential growth in cloud computing. Now, right now, the dominant player in the cloud computing network is AWS. It's Amazon Web Services. And what they do is they basically store data. So they have an online data storage base. They have computing power, which basically means they have massive warehouses, massive facilities full of computers, and they offer cloud computing services to companies. So a lot of companies, they don't have space for the hardware to store all of these computers. They don't want to pay the upfront cost. So they outsource this computing power to a company like Amazon, who hosts these computers, and you can leverage externally over the web the power of cloud computing through paying AWS like a monthly fee or a certain fee per data usage. So cloud computing is massive because obviously the entire world is now operating on computers. So the more people that are on the internet, the more people that are utilizing the internet, the more industries that are utilizing it, the bigger the need becomes for computing power. So AWS is the clear leader in this space. We can see by the data this space is only getting bigger and bigger and bigger. And at the moment, we're seeing a projection of a $1.6 trillion cloud computing market size. So there is a few competitors in the crypto market that are trying to revolutionize this space. I think the main one that I want to talk about today is Akash Network. Something a few of you may have heard of, something a lot of you probably won't have heard of before, because it's quite a niche one, but it is probably the best candidate, at least in my opinion, in the cloud computing space. Now, it's something I'm constantly looking into. If there is a new protocol I find in this space, I'll let you guys know. There is a few, but I think Akash has probably the best team to pioneer and push this forward. The token is AKT, and it is operating in the cloud computing space to kind of try and take a bit of a bite into this into this massive sector. Because look, at the end of the day, crypto is not going to overtake Amazon. That's not what I'm saying at all. Crypto offers a strategic benefit to some of these industries. So Amazon offering AWS, it can offer cloud computing, but by offering these decentralized cloud networks, it actually significantly decreases costs. So cost of upfront hardware, cost of infrastructure, creates an environment long-term that's more efficient. And of course, the entire point of Web3 is to become more efficient and to do things that Web2 can't do. Now, Amazon will always be there offering their service because there always is a need for that infrastructure. But I think Web3 can come in and pinch hit eventually and take up a small slice of their market share over time as more people move onto the blockchain, right? So the thesis here isn't that Akash becomes a $1 trillion market cap like Amazon. The theory here is, even if it takes only a 1 or a 2% slice of the pie of this entire industry, then that's still going to result in a multi-billion-dollar valuation. So you don't actually need to overtake a company here. Remember that, for a project to succeed. All you need to do is make a slight, tiny 1% indent into a massive industry to result in a huge price performance. And yeah, so Akash is definitely one that I'm looking into. I actually don't own Akash. So people in the comments are saying pump your bags. I don't own Akash, and I'm not aware of if Ran owns it. Someone says Ran owns it. If he owns it, that's good for him. I researched this video entirely on my own, and these are the projects that I found based on my research that I like. This is one on my watch list. It's one I will be buying in the near future. It's not one I've bought yet because I'm waiting for this bit. Oh my goodness, I was going to say I'm waiting for the Bitcoin price to come down a little bit, but we can see we're pumping through and smashing through the range high right now. This is so distracting. I'm trying to do a very informative show on Web 2 versus Web 3, and we are seeing the prices pump and completely distract me from what I'm trying to explain to you guys. I'm going to get to what Akash does in a second, but wow, these charts are exploding. And we have Ethereum exploding. We have Fantom exploding. I mean, you guys, I'm really sorry to say, you can't long right now. You just can't long right now because we need this retest. Okay, on the retest, we maybe can long. But I mean, you definitely want to. I mean, we need to break 23. So before we all get too excited and get our panties in a twist here, even though this is the range high line I've got drawn in, remember this previous line at 22,985. So the 23K mark, we actually still need to break through. So I have drawn the line here, but remember, like, 23 is that psychological number still that we need to break. Although the fact we're holding above the 200 MA means like we're bullish here. So if you don't have a long, this isn't the range to long at 22.8. The range to long is definitely on the retest. But if we do hold above 23 and then retest, sure, load up on longs. Feel free to do that. But right now, let's just hold off. Personally, I mean, you can do what you want. It's your money, but I'm just holding off. But a lot of you would already be in longs because Sheldon gave the longs last night live on the show. So if you listen to him, and you would already be in longs because last night your limit orders would have just hit and you'd probably already be up like 60% now. So look, I know not all of you are in longs, so I know it's, a bit rude to say that, but I actually shorted, made money there, so I was happy not to take the longs because obviously selling a short is the equivalent of opening a long in many ways. So I had shorts open. I closed the shorts on the retest. I banked my profits. That was my version of a long. I didn't roll those profits into a long just because I was happy with the profits I made off the shorts. So I personally didn't get into the longs because of that, but I did make money off that reversal. So now it's up to you if you're already in a long, good job. If not, let's just wait for this retest because otherwise you're kind of buying into highs. And unfortunately, just as a rule of trading, we don't want to be stupid and we don't want to FOMO. The market's taught us anything over the last few months, it's not to FOMO in during pumps. But obviously on a retest, then that becomes a very valid trade with a tight stop loss. So two very separate discussions. All right, should I get back into Akash? Because I could seriously get distracted and just trade all day. But I have to get my head back into this show because it's such valuable knowledge I'm trying to share with you guys. But the freaking market is just pumping in the background. It's just distracting. Very, very distracting. All right. Basically, Akash is built on Cosmos. So basically, Akash operates as a decentralized cloud. This industry is dominated by Amazon and Google, absolutely dominated. But having a network like Akash coming in, as I said, it only needs to actually, generate a 1%. A 1% market share or even a 0.1% market share of this industry to actually have, massive ramifications as a whole. Now, I had the Akash white paper up for you, but I just lost it. So I don't know if I can, show you that right now, but maybe it's on their Medium, Telegram. It's LinkedIn. All right, I'm going to have to get this in a future video, the white paper itself, unless we can get onto their website. But Akash is actually one I really like, and it's one that I'm looking into as a potential play, because it's one I'm very, very, very interested in. So it basically is the unstoppable cloud. So it becomes the infrastructure that powers Web3. It's a distributed peer-to-peer marketplace for cloud computing. So if we think of cloud computing at the moment, it's hosted by these centralized entities. The real benefit of going onto the blockchain is you can become a lot more cost efficient because it means you can have distributed ledgers. So each individual point of contact all talking to each other and all powering data and powering computing power through a distributed network. Now, decentralizing this network makes it a lot more secure long term. And I guess the big theory behind decentralization is that you can make previously insecure centralized entities, even though I wouldn't call Amazon insecure, you could argue there are security flaws that could potentially be ironed out by Web3 and grant that essential immutability. Let's say Amazon goes down, for example, and Amazon goes bankrupt and they're forced to liquidate a lot of their assets or, shut down certain services, then that could have a massive hit and an impact on a business that relies on cloud computing. Not saying it'll happen, just saying, it's a potential security flaw. The idea is that Web3 can grant immutability where if one node goes down, then the entire network doesn't go down. And it becomes not only efficient from a cost perspective, but also from a security perspective. So I actually do really like Akash as a potential way to deploy applications, configure and manage services. So what they're allowing you to do is deploy applications on the cloud. Instead of deploying on a set of hardware, you can deploy, configure, set up applications on the cloud and manage services. And you can provide cloud services to developers to build on top of your service using the Akash network. Now, this is in its very early stages. I'm pretty sure mainnet hasn't even launched yet. So there's a lot that needs to happen. But that is the technology that is there right now that could potentially disrupt Web 2. So I do definitely think it's one to keep our eyes on. If you want to learn about the future of the cloud, they do these really good kind of AMAs, these weekly chats with the founder, Greg Osuri, that I highly recommend checking out. They're very, very, very interesting. We can actually see that the AKT spent already is going parabolic, up 28% just for the day as of July 6th. So some massive updates there that they keep you updated on. All right. The last industry I want to show and share with you guys while I continuously get distracted by the Bitcoin price pumping is the Internet of Things. Now, the Internet of Things is probably the biggest network on this entire list. It's currently being dominated by two big players, Google and Amazon. Remember, guys, smash a like for this last one because this last one is pretty massive in my opinion. And it actually is the token I'm most bullish on of this entire list. From a purchase perspective. I don't know, maybe Arweave. I'm pretty bullish on Arweave, but long term, I do like Akash. I'm pretty bullish on Arweave. This next one I'm very bullish on, I think. I say I think because I'm still conducting my research, but based on the last few months of research that I've done, this is one that I don't own, but I'll be adding to my bags. And it is trying to penetrate this Internet of Things industry, which is quite massive. So firstly, before I get into the project, I have to explain what the Internet of Things actually is and what it actually does. So the Internet of Things are devices that support the expansion of the internet connection beyond the usual standard devices. So right now, you can connect directly to the internet through a computer, a laptop, a smartphone, go on Google from your smartphone, scroll through an application, and you're connecting directly with the internet. Internet of Things devices are devices that operate remotely and require remote connections to the internet. So the ones that are purely integrated with the internet through an intermediary. So for example, a list of IoT devices would be like your Google Home voice controller, or your Amazon Echo Plus, or a dash button, so your doorbells, or your lighting that operates on the cloud, or your doorbell cam, or your smart lock. And this goes even further because these are just retail devices. Like industries, entire businesses that use any smart connectivity where, say, machinery that's building a certain product, it accesses the internet via the cloud to get, let's say, 3D printing data, or, oil rigs potentially one day could be used, to drill oil using remote machines that obviously use the internet. These are Internet of Things devices and applications because they are connecting to the internet, I want to say via a third party, but indirectly. So you're not on your phone accessing the internet. These devices have connectivity remotely to the internet. Now, as you guys know, this is a massive industry because it has ramifications not only across the retail market through any home device, any wireless connected device, even your LED lights or your light switches are Internet of Things devices, but it also has ramifications across manufacturing industries, cloud computing industries, basically any industry that requires a wireless connection to a device. So the Internet of Things market becomes absolutely massive for this reason. And if we want to quantify the data of this network, we could see just how much it's actually grown just from 2019 onwards. It went from 115 billion to 129 billion to 158 billion. This year it's 194, and by 2027 it's projected to increase to 525 billion dollars, and this will only grow exponentially as more and more industries shift to this model, because this is like the model of the future. This is where the future is going. Internet of Things is basically, a massive industry. And if you can just disrupt 0.1% of this industry, that will result in multi-billion-dollar valuations in the future. Now, you'll notice a lot of these projections are long-term. It's because this is a long-term show. This show isn't to give you a short-term scalp trade. This show is to get your mind thinking about long-term plays where over the next 10 years, you can slowly drip deploy into certain protocols. And if one of them wins, you're a millionaire. That is the strategy here for today's video. It's not to make a swing trade on Akash or Arweave. It's to slowly drip invest into these projects. And if they change the world, which they could, they may not, but if they do, then you're obviously positioning yourselves for massive outsized returns versus the risk. Because if you put 1% of your portfolio into Akash and it goes to zero, you lose 1%, who cares? But if Akash takes 0.1% of the cloud computing space, then all of a sudden your 1% investment potentially becomes hundreds of thousands or millions of dollars. That is the strategy in today's video. And that's kind of what I'm trying to, and I'm using Akash as an arbitrary example. There's obviously many, many other plays. That's just an example of a project that's trying to disrupt cloud computing. But this next one is probably the one that I am more bullish on. Internet of Things. It's a hard one to explain, but basically it is a remote connection. So you're not directly on your smartphone. It's a device. They are devices that are connecting wirelessly to the internet. Alexa is definitely one of them. I'm guessing that is the joke you're playing off right now. But Internet of Things, there is one project that stands out in crypto, and there's one project there's two. There's IOTA, which is not the one I'm talking about in today's video. There's one that it's Helium, and it has kind of a very unique positioning over the market right now. Just remember, guys, if you want to screenshot this before I get into Helium, maybe take a screenshot right now if you're on your phone and just, screenshot this list, and I'll update this list over the coming months because I do think this is a fun narrative, but I made this for you guys to screenshot. So take a screenshot. All good. Pause the video. Cool. Helium will be one of the major players that's kind of trying to penetrate this Internet of Things narrative. Now, Helium has a relatively big economic moat because it's by far the biggest project pioneering this space in crypto by far. I know IOTA is one of them, but Helium is by far the biggest, and it also by far has the most potential, in my opinion. And I'll tell you why I think it has the most potential. So, this is awesome, Dutch. You've got Helium hardware at home. That's so, so cool. I actually want to get Helium hardware. I'm actually going to run you guys through the stats to owning Helium hardware in a sec. Very, very, very interesting. Helium's fucking awesome. I love I only really started looking into it recently. And last night I went real deep into Helium because I was researching for this video. And I was like just blown away by some of it. Like I hadn't really given it too much of a look before. I'd heard about it. It was on my watch list, but I just kind of re-looked at it over the last few weeks. And I was just like, whoa, this is awesome. This is really, really, really cool. Because I'm a big picture guy and I love looking at industries which can be disrupted from a big picture view. And Helium is definitely one of these. So currently it has a $1.1 billion market cap, roughly a 2x dilution, which is used to pay miners. We're going to get into mining in a second. Probably the most interesting part of the entire Helium network is its mining mechanism. Now, what is Helium? That's really the question here. What is Helium and what is Helium mining? Because it might sound very, very confusing. So Helium is basically a blockchain-based network for Internet of Things devices. So we know there's Internet of Things devices like your Alexa, like your Google, that are all connecting to the internet. The thing is, this can be a very inefficient process connecting to the internet because there's many intermediaries, there's many potential events where these devices can actually go down and they lose accessibility to the internet, and it's not the most efficient form of connectivity that there could possibly be. By using a distributed blockchain, you're becoming more efficient because you're spreading out your risk in terms of downtime through multiple nodes, which we'll get into in a second in terms of Helium, and you're also using this to pay and reward the people that set up and power these nodes. So it's giving governance back to the people, whereas like a lot of these other internet providers are dominated by certain companies. Like obviously Google and Amazon are two of them. That these industries are absolutely dominated and they're capturing the majority of the revenue. Something like a Helium is rewarding the people for actually validating these networks. And I think that is the most valuable thing about Web3. It's creating a more efficient network, but at the same time powering and rewarding the people that are paying that network. So basically what happens is the token HNT powers the network and pays out whenever hotspots transfer connection data across the network. So it's a distributed ledger network that is essentially used to power Internet of Things devices that use HNT or Helium nodes as hotspots to connect these devices. So what it does is it enables communication between these devices while the system sends data across the network nodes. The nodes that compose the network are known as hotspots in the Helium system, of which you can actually host your own hotspot, which I'll show you how to do in a second. So how does Helium actually work? Helium is creating a decentralized global network for Internet of Things devices that relies on the community of HNT holders, obviously meaning that HNT holders are paid back and rewarded for validating and powering the network. Now, the network consists of nodes, as I previously validated, and by hosting hotspots, users are incentivized for their participation in the network's functionality, meaning as the network grows, as more people use this network, obviously, the more these node operators are paid out, which means there is increased demand for the HNT token from a staking perspective for one, and also from a usability perspective, because HNT is used to power this entire network. It essentially is the governance token of the network, like you see kind of like with an L1, like Ethereum being like the gas token of Ethereum. HNT is the token that powers the HNT network. Now, it doesn't use a proof of stake consensus. It uses a very unique proof of coverage consensus, which means users need to purchase a mining device for Helium's website to set up hotspots. So it's not like proof of stake. Proof of stake operates where if you hold a certain amount of tokens, you can come on, you can stake those tokens in a network online. Like you can stake into the Ethereum, you can stake into Solana, you can stake into Matic, and you get paid out a percentage of rewards for validating, in turn securing those networks. HNT or Helium operates on proof of coverage, so you can't remotely stake. You stake via having mining devices, physical mining devices to set up hotspots. Super unique. And what these mining devices do is these hotspots, essentially, they all connect to each other. So you have a network of thousands and thousands of these devices that all connect to each other. And each of these physical devices acts as a node. And each node on the network powers the entire network. So they're all connecting to each other, and they're kind of used to light up the entire grid, because each of them are connecting. Each connection that's formed strengthens the network, and then essentially the goal is to have a very large distributed ledger where you have a massive coverage basically over the entire earth of the Helium network that's all connecting and all talking to each other. The founders of Helium were actually founded Helium in 2013, one of the oldest projects. One thing that gives me more faith in Helium than other projects is the fact it's been around and survived since 2013. Obviously, it went through crashes. Obviously, it's gone through major collapses, and the token wasn't around since 2013. It was launched slightly later, but the project and the conception itself as a peer-to-peer wireless network was launched in 2013. To this day, with not many competitors in this actual space itself. It's one of the rare projects which actually deals with Internet of Things. Massive industry, not a lot of crypto projects, which are actually utilized here. And Crimson says with radio waves, I guess that's essentially how it's powered. So the uniqueness of Helium as a project focused on improving the IoT is noted in the proof of coverage mechanism. Now, what gives Helium value? What gives the token itself value? Well, it's valued by its utility, technical capacity, and the relevancy of the project and its technology. So essentially, like any project, demand to use the network basically gives the HNT token value. The intrinsic value of the market is obviously valued off the back of speculation. We know that despite the fundamentals of a project, they still are often based off the Bitcoin price, and as an extension of that, they're based off speculation and market speculation, which is why the project has dropped a lot in value. Not because it's being not utilized as much, because the overall market values each project less. Now, I want to get into a very interesting thread on how you actually mine and how you get involved with this narrative, because it's actually very interesting. So essentially, Passive Income Coach does great content, by the way. He does a nice thread on HNT. It's from January, but it's all 100% still relevant. He says, HNT mining is still profitable with an optimal setup. Based on the data I did today, it's not as profitable as it was in January. In fact, it's not completely profitable today, but eventually it will be extremely profitable on the assumption that the HNT token appreciates in value. Retail purchasing takes 8 to 24 weeks to get an HNT miner. To maximize rewards, deploy your miner in a dense location with a high transmit scale with an outdoor antenna. So Helium HNT, he does a little explainer on what it actually is developed to incentivize the creation of a decentralized wireless network. Helium pays individuals HNT to operate the hotspots. There are currently, this is kind of crazy, 470,000 hotspots with 150,000 wallets as of January 11th across 35k cities and 150 countries. I believe, I couldn't get the actual website up just before the show, but I believe this is closer to 500,000 now, which is absolutely crazy. 500,000 hotspots. The max HNT supply is 223 million tokens. There's 2.5 million tokens distributed monthly. Similar to Bitcoin, it operates on a halving cycle of every 2 years. So 30 million USD worth of HNT was staked, and the ratio of HNT minted versus used is dictated in the image here. Now, remember, 30 million in January is now roughly $10 million, not 30 million. Still a lot of money, not as much as it previously was, but that's obviously just reflective of the market conditions, right? So what HNT actually does is allows you to purchase a certain device. They have a list of devices here, which are all the LORAWAN devices that you can actually plug in and use to operate as a hotspot and receive Helium in exchange. These are all the compatible devices that you can use to actually power the Helium network. As of now, there's actually 900,000 hotspots now. So just since this thread in January 11th of 470,000, today there are 900,000 hotspots, growing very, very fast. We can see the majority of hotspots on the network are actually in America, mostly on the East Coast here, because those are the areas that are most populated. Obviously, LA is another one. You are incentivized, so you are incentivized to kind of use hotspots in areas with more demand. So the higher the demographic, or the higher the population density, the more incentivized you are to use it. That's why we see Europe's basically all covered. We have Australia. I'm from Melbourne. I'm sitting down here right now. A lot of Melbourne is covered. But obviously, each little component, each little hexagonal square here is a different hotspot. So if we go to Melbourne's northern suburbs, we can see that there are certain Helium hotspots. And it shows you, this is really, really cool. It shows you who's actually powering these hotspots. And it also shows you where there's room for potential hotspots. So if you bought your own miner and started up a hotspot, you would obviously receive HNT tokens and you would contribute to powering this network. Now, eventually, the consensus is as this network continues to grow, then the demand for HNT tokens will grow. The interesting thing to note is that based on current revenue, Helium on Token Terminal is actually the most has the most positive PE ratio of any project. Now, PE ratio is the opposite. So the lower the price earnings ratio, the better valued your project actually is. So we look at the top 3 blockchains by PE. This is the total market cap of a project based on its earnings. We see Helium comes in at an 81x, Ethereum at a 150x, and then the third best Filecoin at a 586x. Because crypto is so speculative, they trade on crazy valuations, 1000x multiples, because crypto is speculative. You can't really judge many cryptocurrencies like a stock. You have to view them in their own right, and you have to view them based on their growth potential and not necessarily on their current revenue generation. Whereas Helium, the very interesting thing is, due to its effectiveness as a network, it actually does generate revenue, and based on its market cap, it has a PE of 81. So from a stock, if we were in basing Helium like a stock, which you can't, but let's for a second say that we were pricing Helium like a stock, it would be the best value project on the entire crypto market based on its PE ratio. Just another very interesting fact, because it actually is being utilized and generating revenue, unlike a lot of other projects. And I think the economic moat it has, so the lack of relative competition, makes Helium a very interesting proposition. Should you start up a miner? Will need to do more exact calculations on this. I saw a tweet earlier today that said it wasn't profitable right now. So maybe if someone is mining in the comments, they can let me know right now if it is profitable. Bobacat 500, that's one of the miners, apparently costs 2,500. So there's probably a break even time. Right now, Bitcoin mining's like 500 days to break even, 400 days to break even based on hardware. I wonder if it's similar with Helium. To be honest, the easiest thing to do in terms of Helium would probably be just to buy the HNT token. Like Bitcoin mining, right now it's more profitable to buy Bitcoin than it is to actually mine. So a lot of people are saying it's not profitable right now. And based on my quick head calculations, it probably wouldn't be. So the way to get exposure would then simply be just to buy the HNT token, right? Until mining becomes profitable, and then you would mine Helium. Okay, a lot of people saying it's not profitable. Then obviously the play just becomes buying HNT, because in turn it ends up balancing out. Just as people buy Bitcoin, instead of mining Bitcoin, you can just buy the token and get exposure to the network that way. That would be one way to do it if you're interested. But a very, very, very cool, very, very cool concept for HNT, and also a very nice PE ratio. So HNT is the last one on my list, Helium, and it's actually one of the most owned VC assets in crypto. So I think it's a top, based on Masari's last quarterly report, it was a top 10 commonly held owned asset by VCs. Obviously, they're accepting that this is a industry that has huge upside. So that is my list. It's ENS, Audio, Theta, Fire plus AR, AKT, and HNT. Crypto King says it only costs cents in yearly electricity, so it's not bad. Google's still backing HNT. So there's a lot of bullish catalysts for HNT. Obviously, this all relies on the crypto market, which means, goes without saying, none of these purchases are short-term trades. None of these purchases are short-term swing trades that I'm betting on Helium exploding tomorrow. That's not really what I'm trying to do here. What I am doing is I'm positioning a small percentage of my portfolio in narratives that I think have outsized returns relative to their current market caps. I think Helium, Akash, and Arweave are some of them. I'm not invested in ENS, Audio, or Theta. I think they're interesting comparisons. Personally, I'm more interested in storage and cloud computing than I am in domains, but I gave you a variety of options because at the end of the day, you should invest in crypto what you are passionate about and what you believe in as a narrative. So if I believe in cloud computing, but you don't understand cloud computing, don't invest in something you don't understand. Some of the greatest investing advice I could ever give is invest in things you're passionate about and invest in things you understand. I took a massive bet on Apple in 2019, and I 4x my holdings on a stock, which is basically unheard of, which was one of my best dollar returns to date in any market because of the capital I outlaid. And the reason I did so well in that trade is because I was a massive, and I still am a massive Apple fanboy. So I own all the products. I understand the business model. I understood they were shifting towards the services more so than the hardware. And I knew anecdotally that the hardware was strong. And I verified that with their balance sheet, the DCF, discounted cash flow model, and their price to earnings ratio. And I came up with a thesis to buy Apple based on that premise because I understood what they were doing and I had a deep understanding and personal connection to the business. In terms of investing, I think a similar approach is actually quite good because if you invest in projects you understand, narratives you believe in, narratives you're passionate about, provided the facts actually check out and provided your research and the data checks out, you're going to have a much better time holding through the cyclical cycles of crypto, through the downturns, through the upturns, if you actually believe in said narrative. So if you believe in the Internet of Things as being a narrative that takes over crypto, then definitely that's one to invest in. Because if you believe in Internet of Things, you're going to be able to hold Helium through massive downturns because you have conviction in that narrative. So I believe in these narratives. So I'm happy to hold HNT down to $1 or AKT down to what is it now? 30 cents down to like 2 cents, and I'll keep probably DCAing because I believe in those narratives. And at the end of the day, as long-term bets, we should not really give a shit whether we buy something at 1 cent, 30 cents, 10 cents if we believe it's going to be $30. But this is for the long-term investors out there. Let's get out of the short-term money mindset when it comes to these plays, because these are 10-year, decade-long transformations of industries that we are seeing from the shift from Web 2 to Web 3. These aren't overnight success stories, although we will see massive gains in the meantime. That's just the reality of crypto. The market swings. That's when you take your profits. That's when you reallocate capital, but you got to have a long-term plan to accumulate. That is basically my thesis when it comes to Web 2 to Web 3, and I will be talking a lot more about this topic in the future. Frankly, I don't think I'll do a list this big again in the future because it took like an hour, and I think in the future it would be better to just deep dive into one project specifically. So like do a massive deep dive in Audius, do a massive deep dive in Theta, massive HNT, instead of covering 10 on the surface level. But yeah, that's obviously future content for you guys, which is good for both of us. So Bitcoin, just before I head off, Bitcoin is still getting rejected on this range high. So let's not get too FOMO-y, although the altcoins are giving you reason to FOMO because that's a massive wick on the 4-hourly. That's a massive, massive wick. In fact, Fantom, also a massive wick. ADA, also a massive wick. But I'm still looking for this close above the range high at 23K. Until we see that, I'm not longing anything. In fact, could be a short if we keep getting rejected, but let's just keep our eyes on this right now. All right. Whew, I'm almost out of breath. It's a very long show. All right. I'm going to see you guys in the next show, which will be tomorrow at 7:20 p.m. EST. Make sure to smash the like button. I'll catch you tomorrow. Peace out.